Hello, I'm Nuria Kearns and welcome to Market Roundup, our monthly look at house price indexes and the latest mortgage rates. Both Nationwide and Halifax have recently published their monthly reports, where Halifax reports a growth in house prices of 6% in the 3 months to November. Nationwide reports a slowdown to 4.4% from 4.8%. Bear in mind that annual property price growth peaked at 10% in March. The Halifax said that despite the pickup reported in November, annual house price growth may slow over the coming months. Prices were up by 0.2% compared with October and had risen by 0.8% in the 3 months to the end of November compared with the previous quarter. It said the average UK price currently stands at £218,002, according to the Halifax, and just under £205,000 on the Nationwide report. Around the country overall, the market remained buoyant. Despite the traditional slowdown in activity as we head towards the Christmas period, the latest figures from the Agency Express Property Activity Index show that new listings for sale were down by just 4.7% month on month, compared to a fall of 12.2% in the corresponding month last year. Meanwhile, homes sold dropped by 1.8% last month, a major improvement on the 14.7% decline recorded in November 2015. And the hottest region in the country, where there has been a 20.6% rise in house prices, is not in London or the southeast, but the islands of Orkney. This, of course, should be taken with a pinch of salt. While 1 or 2 high-price sales can distort the figures on average, there are around 25 to 30 sales per month across the 70 islands, compared to 1,000 sales in a large local authority like Birmingham. According to the Bank of England's seasonably adjusted figures, mortgage approvals have also stabilised. The volume of mortgage approvals for house purchases, a leading indicator of completed house sales, were unchanged in the 3 months to October compared with the preceding 3 months. On a monthly basis, approvals increased for the second successive month, rising by 6% between September and October, indicating a likely increase in home sales over the coming months. This data from the Bank of England shows that 67,518 home loans were approved in October, up from 63,594 in September, and the highest number since March. Let's now take a look at some of the favourable mortgage rates currently available. Although HSBC is pulling its 0.99% 2-year fixed rate deal, many low-rate mortgage products remain available. Of the 2-year fixed rate deals, Virgin currently have 2 1.99% products available. HSBC has a variety of low rates at 2.04%, 2.19% and 2.54%. The Post Office offers their lowest at 2.27%. If you are looking for something lower, around 1%, then look to Yorkshire Building Society, who currently have a 2-year fixed at 0.94%, then reverting to 4.74%. This is a 65% loan-to-value product. For 75% loan-to-value, with an initial low rate, Leeds Building Society have 1.19%. If you're looking for a tracker, the Mortgage Works have 2.09% for 2 years, and Barclays are offering 1.49%, both based on 75% loan-to-value. Adrian Gill, Executive Director at Your Move and Reed Rains, has this comment on the rates. With so many lenders now offering record low mortgage rates, there has never been a better time to buy. This, coupled with the government's recent announcement of a £1.4 billion investment into the housing market, suggests an optimistic future for the sector. There are now more than a third of fixed-rate mortgage deals currently on the market offered without an arrangement fee, shows fresh research from moneyfacts.co.uk. Charlotte Nelson, one of their finance experts, said, "It's great news that the number of fixed-rate deals without a fee has increased by a staggering 606 products. With more deals now than ever offering a no-fee option, it is clear to see that lenders are trying to compete in ways beyond just the headline rate." And coming back to the housing market in general, it's fair to say that the slowdown and caution is down to the political and economic uncertainty we are generally facing. Buy-to-let, however, is still perceived as a safe investment strategy over and above saving accounts. In the latest edition of Kent Reliance Buy-to-Let Britain report, more than half, 53%, of buy-to-let landlords are now confident over the prospects for their portfolios. That's all from Market Roundup this month. Join Simon and I for the final programme from Property Box for 2016, where we will be taking a review of the year's key events in property investing. Do not miss it. Thank you for watching. Goodbye. Price growth. Oh, it might slow. Oh, they're like for their portfolios. That was, sorry, let's just go again. In property investment. Boom.